Hello everyone and welcome back to the sessions on financial reporting. Friends, in this class of financial reporting, we will again take up a small and simple topic for discussion, and that is titled as CSR, Corporate Social Responsibility. Now, why this topic in your syllabus? Basically, this is not an accounting topic. This is a legal requirement which has been placed into your financial reporting syllabus, and maybe because of the accounting part of this corporate social responsibility that will come at the later stage, we will deal with that, which is very simple. Within 5 minutes you can understand, but major focus on the topic is towards the legal criteria with respect to what exactly would be corporate social responsibility and what are the various inclusions within this. So, first of all, let us step into the core objective of this. If there is a company which is operating in India and earning profits, it is expected that such company should spend certain amount of its profits for social cause. There can be n number of items in the list of social cause. You can say for removal of poverty, for solving food problem, for solving the problem of uneducation. You can have a big list of items where you can find lots of social causes where spendings is needed. So basically, this is the objective of the government, or I would rather say it is the responsibility of government to spend funds towards these social causes, but law is asking companies also to spend a certain amount of their profits. So first of all, are all companies having this as a mandatory requirement? The answer is no. Only those companies which are fulfilling the criteria given under section 135 of Companies Act 2013, only those companies will have to comply with the requirements of corporate social responsibility. Which are those companies? Section 135 of the Companies Act 2013 has laid down certain criteria, and if a company is fitting into that criteria, it will have a mandatory application with respect to corporate social responsibility. What is that criteria? Let us first understand that. A company having its net worth equal to or greater than rupees 500 crores, or a company having its turnover which is rupees 1000 crores or more, or a company which is having net profit of rupees 5 crores or more. I repeat, a company having net worth of rupees 500 crores or more. Second criteria, a company having its turnover which is rupees 1000 crores or more. Third criteria, a company having its net profit which is rupees 5 crores or more. If any company is fulfilling any of this criteria, it will have a mandatory requirement to bear corporate social responsibility. Such companies will be required to formulate a committee considered as CSR committee, and this CSR committee will lay down certain policies which the board of directors will have to ensure that it is implemented with respect to expenditure incurred on social responsibility. And because this social responsibility is to be fulfilled by a company, we generally call it as corporate social responsibility. Now, one thing, if a company is fulfilling this criteria, it will have to set up a committee, and committee has to formulate the policy. More importantly, this policy formulation has to be in line with Schedule 7 to Companies Act 2013 and the company's CSR policy rules 2014. Now, which are those permissible activities under CSR policy which are covered under Schedule 7 to Companies Act? We will talk about that in details later. But as of now, please understand, the moment a company has fulfilled the criteria given under section 135, the law requires that such company should spend 2% of its net profit towards activities listed under CSR activities. So friends, I told you this topic has nothing much with respect to financial reporting, rather it is more of a legal compliance and what would happen if the compliances are not made, and what would be the responsibility of the committee set up for this purpose by the company, and what would be the responsibility of the board of directors in this regard. We are going to discuss everything, but first of all let us write down what we have discussed by far. And friends, I told you this topic has not much to understand with respect to accounting concept. It is more of a legal compliance which we are discussing over here. So based on what we have just discussed, please write under the heading corporate social responsibility. So CSR means and includes but is not limited to: number 1, projects or programs relating to activities specified in Schedule 7, or projects or programs relating to activities undertaken by the board of directors of a company in pursuance of the recommendations of the CSR committee of the board as per the declared CSR policy of the company. Let us move ahead and look into the statutory requirements. So please write statutory provisions. In India, the Companies Act 2013 has statutorily recognized the concept of CSR. Section 135 of the Companies Act 2013, read with Schedule 7 thereto, and Companies Corporate Social Responsibility Policy Rules 2014 are the special provisions under new company law regime imposing mandatory CSR obligations. Let us move ahead and now answer a typical question, that which company to perform corporate social responsibility? The answer to this question is straight: every company, including its holding or subsidiary and a foreign company defined under clause 42 of section 2 of the Companies Act, having its branch office or project office in India, which fulfills the criteria specified in subsection L of section 135 of the Act, shall comply with the provisions of section 135 and these rules, provided that net worth, turnover or net profit of a foreign company shall be computed in accordance with the balance sheet and profit and loss of such company prepared in accordance with the provision of clause A of subsection 1 of section 381 and section 198 of the Act. Now the main part of the answer to this question, as in which company to perform corporate social responsibility, will be addressed now. So what I am going to now discuss is something very important. You should note it down carefully. So as per section 135 of the Companies Act 2013, every company having either net worth of rupees 500 crore or more, or turnover of rupees 1000 crore or more, or a net profit of rupees 5 crore or more during the immediate preceding financial year shall constitute a corporate social responsibility committee, that is CSR committee of the board, consisting of 3 or more directors. However, if a company is not required to appoint an independent director under section 149(4) of the Companies Act, then its CSR committee shall be formed with 2 or more directors. Now let us move ahead and observe the role of this committee and role of the board. So please write up this heading. Now talking about the role of the committee and the role of the board, just understand one simple thing. The role and responsibility of the committee is towards formulating the CSR policy. That means the committee will be responsible to formulate the CSR policy and to recommend to the board how much expenditure should be incurred towards CSR activities, and of course the nature of expenditure. Thereafter, the committee is also responsible to monitor the CSR policy of the company time to time. So it's not about one time thing that you formulate a policy and then the board will execute it. It is again the responsibility of the CSR committee to continue to monitor the CSR policy of the company. Now what is the role of the board? Board's role is rather more dynamic and a bigger role because it has to carry out the implementation. Board is responsible to look into one thing, whether all the criterias laid down in the policy, all the activities laid down in the policy are fulfilled. So all implementation work is the responsibility of the board. So let us do one thing, let us write up in detail what are the roles and responsibilities of the committee and that of the board. Now in this order, let us first write the role of CSR committee. The CSR committee shall formulate and recommend to the board a CSR policy indicating the activities to be undertaken by the company in the areas or subjects specified in Schedule 7 and the amount of expenditure to be incurred on the above activities, and monitor the CSR policy of the company from time to time. Let us move ahead and write about the role of the board. So please write, the board shall disclose the composition of CSR committee in its report, approve the recommended CSR policy for the company, disclose the contents of such policy in its report and place it on the company's website, ensure that the activities included in CSR policy of the company are duly executed by the company, ensure that the company spends in every financial year at least 2% of the average net profits of the company made during the 3 immediately preceding financial years by giving preference to the local area and areas around it where it operates. Now in this fifth point, can you notice these words 3 immediately preceding financial years? There may be a point that what if after the incorporation of the company even 3 years have not been passed. That means company has been incorporated in the recent past and 3 years have not passed. Then what? To answer that question, just write one paragraph over here where the company has not completed the period of 3 financial years since its incorporation. 2% of the net profits during such immediately preceding financial year shall be considered. That means then you consider only the net profit of the preceding financial year. In case the company fails to spend such amount, the board shall specify reasons for not spending the amount, and unless the unspent amount relates to any ongoing project, transfer such unspent amount to a fund specified in Schedule 7 within a period of 6 months of the expiry of the financial year. Now if you read this third line of the second paragraph over here, unless the unspent amount relates to any ongoing project, then it is a period of 6 months. What if the unspent amount relates to any ongoing project? Then what? To answer this question, let us write the next paragraph over here. Any amount remaining unspent pursuant to any ongoing project undertaken by a company in pursuance of corporate social responsibility policy shall be transferred by the company within 30 days from the end of the financial year to a special account which is opened by the company in that behalf for that financial year in any scheduled bank, to be called the unspent corporate social responsibility amount, simply unspent CSR amount. Such amount shall be spent by the company in pursuance of its obligation towards CSR policy within 3 financial years from the date of such transfer, failing which the company shall transfer the same to a fund specified in Schedule 7 within 30 days from the date of completion of the 3rd financial year. So when the amount remains unspent, then what we have to do? We have seen that scenario. What if the amount spent is in excess? Can that excess amount be carried forward? So that is the next upcoming question, whether the excess amount can be carried forward to set off against future CSR expenditure. The answer to that will be, where a company spends more than that required under law, a question arises as to whether the excess amount spent can be carried forward to be adjusted against amounts to be spent on CSR activities in future period. So the answer to this question is straight. Since 2% of average net profits of immediately preceding 3 years is the minimum amount which is required to be spent under section 135(5) of the Act, the excess amount cannot be carried forward for set off against the CSR expenditure required to be spent in future. That means this requirement is mandatorily applied year after year. Even if you have spent more amount, you cannot take the benefit of that excess spending to the next financial year. Let us now move ahead and see what would happen with respect to non-compliance with CSR. If a company contravenes the above provisions, the company shall be punishable with a fine which shall not be less than rupees 50,000 but which may extend to rupees 25 lakhs, and every defaulting officer of such company shall be punishable with imprisonment for a term up to 3 years or with a fine which shall not be less than rupees 50,000 but which may extend to rupees 5 lakhs, or with both. Let us move ahead and write some important points on CSR activities. The CSR activities undertaken by the company shall exclude activities undertaken in pursuance of its normal course of business. A company may collaborate with other companies for undertaking projects or programs or CFR activities in such a manner that CFR committees of respective companies are in a position to report separately on such projects or programs in accordance with these rules. The CSR projects or programs or activities undertaken in India only shall amount to CSR expenditure. Let us move ahead and continue writing these important points further. The CSR projects or programs or activities that benefit only the employees of the company and their families shall not be considered as CSR activities in accordance with Section 135 of the Act. Companies may build CSR capacities of their own personnel as well as those of their implementing agencies through institutions with established track record of at least 3 financial years, but such expenditure shall not exceed 5% of total CSR expenditure of the company in one financial year. Contribution of any amount directly or indirectly to any political party shall not be considered as CSR activity. Let us move ahead and continue writing these important points. Next point is, the surplus arising out of the CSR projects or programs or activities shall not form part of the business profit of a company. CSR expenditure shall include all expenditure including contribution to corpus for projects or programs relating to CSR activities approved by the board on the recommendation of its CSR committee, but does not include any expenditure on an item not in conformity or not in line with activities which fall within the purview of Schedule 7 of the Act. The board's report of a company shall include an annual report on CSR containing particulars as specified. Let us move ahead and have a look into the permissible activities under CSR policies as per Schedule 7. So as per Schedule 7 of the Companies Act 2013, following activities may be included by companies in their CSR policies activities relating to: number 1, eradicating hunger, poverty and malnutrition; promoting health care including preventive health care and sanitation, including contribution to the Swachh Bharat Kosh set up by the central government for the promotion of sanitation and making available safe drinking water; promoting education including special education and employment enhancing vocation skills, especially among children, women, elderly and differently abled, and livelihood enhancement projects. Let us move ahead and complete the list of this permissible activities under Schedule 7. So third point in this regard is promoting gender equality, empowering women, setting up homes and hostels for women and orphans, setting up old age homes, daycare centers and such other facilities for senior citizens, and measures for reducing inequalities faced by socially and economically backward groups, ensuring environmental sustainability, ecological balance, protection of flora and fauna, animal welfare, agroforestry, conservation of natural resources, and maintaining quality of soil, air and water, including contribution to the Clean Ganga Fund set up by the central government for rejuvenation of river Ganga. Let us move ahead and continue writing those further permissible points under the list. Protection of national heritage, art and culture, including restoration of buildings and sites of historical importance and works of art. Setting up public libraries, promotions and developments of traditional arts and handicrafts. Measures for the benefit of armed forces veteran, war widows and their dependents. Training to promote rural sports, nationally recognized sports and Olympic sports. Contributions or funds provided to technology incubators located within academic institutions which are approved by the central government. Let us write few more points to complete the list. So, 9th point in this order will be contribution to the Prime Minister's National Relief Fund or any other fund set up by the central government for socio-economic development and relief and welfare of the scheduled castes, the scheduled tribes and other backward classes, minorities and women, and rural development projects. Slum area development, disaster management including relief, rehabilitation and reconstruction activities. Let us move ahead and now begin with accounting for CSR. Talking about the accounting part, that is accounting for CSR transaction, a simple matter. Whenever you are carrying out any CSR activity which is of course giving rise to an expenditure, you will simply recognize that expenditure in the statement of profit and loss. So, how would you account for it? Suppose you are incurring a revenue expenditure, you would simply record that as a CSR expenditure and recognize it in the statement of P&L. So, you will pass a couple of journal entries, CSR expenditure debit to bank or to vendor's account, and then profit and loss debit to CSR expenditure. All CSR expenditures which are revenue expenditures will be recognized in the statement of profit or loss. Sometimes incurring a CSR expenditure would result into an asset. For example, that nature of that expenditure may be a capital expenditure and it may give rise to assets like property, plant and equipment, or intangible assets, or even investment property. So, if these are assets required to fulfill the CSR activities, these will be recognized by the company under a separate head of that same category, that is CSR asset. Let me explain this point very well. First thing, what is required in this regard, whichever applicable Ind AS comes into picture, the recognition criteria of that Ind AS will have to be fulfilled. For example, if any CSR expenditure which is a capital expenditure is giving rise to property, plant and equipment, then you should apply Ind AS 16, that is the recognition criteria of Ind AS 16, and look into whether that recognition criteria is fulfilled or not. If the recognition criteria of Ind AS 16 is fulfilled, you will recognize an asset under the heading property, plant and equipment. However, there will be a subheading given to that asset as a CSR asset. So, you will find in company's balance sheet, if there are components of property, plant and equipment, one of the component would also be CSR asset. Likewise, if it is an intangible asset, apply Ind AS 38. If it is an investment property, apply Ind AS 40 and the like. Now, there may be one more possibility, that the entity is supplying its own manufactured goods or services for CSR compliance. For example, suppose the entity is into manufacture of stationery products, and to comply with its CSR activities, it has provided stocks of notebooks etc. to certain educational institutions free of cost. That means, to comply with its CSR, the entity is providing its own manufactured goods. In such cases, how would you recognize that expenditure? Recognition of that expenditure will be made the moment the title to goods is transferred, and the amount of that expenditure will depend upon the valuation of that inventory item. So the valuation will have to be done exactly in accordance with Ind AS. That is, in my example, you would consider application of Ind AS 2 because it is the entity's own inventory which is becoming a CSR expenditure. If it is any kind of service that is rendered by the entity, the service will be recognized at its cost. There may be a possibility of any kind of indirect taxes that may arise on such provision of goods or services. The simplest example could be GST, that is goods and service taxes. Now, if it is applicable GST which you have incurred for providing goods and services for fulfilling CSR activities, you will consider even that taxes paid as component of CSR expenditure. So friends, let us do one thing now. Let us write up all this what we have discussed, and with this the session will also end up. So based on what we have just discussed, please write accounting for CSR transactions. Revenue expenditure made in the current financial year, you will simply pass an entry CSR expenditure debit to bank or vendor. CSR expenditure is an item of profit and loss statement. So basically this expenditure will be recognized in the statement of P&L. CSR expenditure made towards a capital asset. In that case, what you have to do is, in case the expenditure incurred by the company is of a nature that give rise to an asset, it should be recognized by the company in its balance sheet, provided the control over the asset is with the company and future economic benefits are expected to flow to the company. Let us move ahead and look into the accounting treatment for capital expenditure over here. So accounting treatment as per Ind AS, where any CSR asset is recognized in its balance sheet, the same may be classified under the natural head. For example, property, plant and equipment, intangible assets or investment property, with specific subhead of CSR asset if the expenditure satisfies the recognition criteria of asset. So most important thing over here is the criteria for the asset recognition should be fulfilled exactly in accordance with the respective Ind AS. And the journal entry that you would pass in such case will be CSR asset, which will be presented in the balance sheet. So CSR asset debit to bank or vendor, and that will be the accounting entry that you would pass. Let us move ahead and continue writing further. The recognition criteria for asset under Ind AS, that is Ind AS 16 property, plant and equipment, Ind AS 40 that is investment property, and Ind AS 38 that is intangible assets, is to be satisfied. Supply of manufactured goods or services by an entity. So it may happen that the entity is providing its own goods or service towards CSR expenditure. So under this heading, supply of manufactured goods or services by an entity, please write, in some cases a company may supply goods manufactured by it or render services as CSR activities. In such cases, the expenditure incurred should be recognized when the control on the goods manufactured by it is transferred or the allowable services are rendered by the employees. Let us move ahead and continue writing further some important points. The goods manufactured by the company should be valued in accordance with the principles prescribed in Ind AS 2, that is inventories. The services rendered should be measured at cost. Indirect taxes on goods and services so contributed will also form part of the CSR expenditure. Where a company receives a grant from others for carrying out CSR activities, the CSR expenditure should be measured net of the grant.